Welcome back to our deep dive. Today we're zeroing in on HAR cryptocurrency. We've got a market update, and things have moved pretty much as expected, haven't they?
They have, yeah. You'll remember we were looking at a potential dip for HAR, maybe down to that 12.8 to 12.7 cent support area.
And it hit it,
It did, landed right in that zone.
which is always, well, it's notable when these levels hold, especially those Fibonacci levels we talked about. Those points traders watch.
Exactly, derived from that mathematical sequence. And we saw a reaction, a bounce from that zone.
So that brings us to the big question for today's deep dive. Is this bounce the real deal? Are we looking at a proper market bottom for HAR?
That's really the million-dollar question, isn't it? Look, the analyst perspective here is cautiously optimistic, which feels right.
Cautiously optimistic. Okay.
Yeah, because hitting that support zone we anticipated and getting a reaction, that's definitely step one, a good sign.
But not enough on its own.
No, definitely not. It doesn't automatically mean, that we've seen the absolute low and it's all uphill from here.
Okay, so what are they looking for then? What needs to happen to get more confidence that, yeah, maybe this is the bottom forming?
Right, so two main things they're watching. First, the formation of a specific pattern. They call it a five-wave structure.
A five-wave structure, like five distinct moves.
Kind of, yeah. Think of it as maybe five swings, suggesting the start of a new upward push. It's a technical pattern analysts watch.
Okay, that's one. What's the second thing?
The second and maybe more immediate thing is that the price has to hold support. Specifically, it needs to stay above that 13.3 to 14.9 cent range.
Okay, so that zone is really key right now.
It's the immediate battleground, yeah.
And I think the update mentioned one level within that zone is particularly important, 13.3 cents.
Exactly right. They really stress that point. If HAR breaks down below 13.3 cents, well, that's a pretty strong signal that this current bounce is probably just temporary.
A failed reversal attempt, basically.
Precisely. It's like a critical line in the sand for the bulls right now.
Okay, and hypothetically, let's say it does break below 13.3. What happens then? Where's the next potential stop?
Well, if that level gives way, the next major support area they're flagging is significantly lower, down around 9.8 cents.
Wow, okay, so there's quite a bit riding on holding that 13.3 level.
There really is. It underscores why staying above it is so vital if you're hoping for a sustained move up.
Makes sense. Now, they also mentioned looking at like a shorter time frame chart for extra clues.
Yeah, for sort of nearer term confirmation.
What's the key thing to watch there?
On that shorter view, what you really want to see is the price pushing up and breaking above the previous recent high. That sits around 16.7 cents.
Okay. Breaking 16.7.
Exactly. If it can manage that, it gives you a lot more confidence that a genuine low might actually be in place. Suggests stronger buying.
Got it. So let's sort of recap. We hit the support zone, got a bounce, which is good.
Mm-hmm.
But the outlook is still cautious. We need to see that potential five-wave pattern start to form. The price needs to stay above 13.3 cents.
Crucially.
And ideally, we'd see it break that 16.7 cent level for like stronger confirmation.
You've got it. It's like, we saw the potential setup, but the follow-through isn't confirmed yet. Need more evidence before declaring the downtrend over.
It's like reaching base camp, maybe, but the summit's still a way off. Need to see more progress.
That's a good analogy, yeah. The key takeaway is really that hitting support and bouncing is encouraging, but it's only one piece. You need that follow-through, those technical confirmations, to be more sure about a sustainable bottom for HAR.
It really just goes to show navigating these crypto markets, it takes careful analysis, doesn't it?
Yeah.
And patience, lots of patience.
Oh, absolutely. Just because a level gets hit doesn't mean the trend instantly reverses. Markets need time to prove themselves.
Yeah. And it makes you wonder, doesn't it, about these technical tools like Fibonacci and wave counts.
Mm-hmm.
How much do they actually, reveal about market psychology, about shifts in sentiment, even if they aren't crystal balls?
That's a fascinating question, really. You have to consider how these tools might influence behavior, too, right? If enough traders are watching the same levels, their actions can sort of reinforce the patterns. It's an interesting interplay between the charts and collective belief.
Definitely food for thought. All right, thanks for walking through that update with me.
My pleasure.
We'll be back soon for another deep dive.